where would be the sectors that you would advise clients, look, here's where you want to be exposed to because that's where the growth is? The dividend payers were working for a while,
right.
but then people were saying, well, maybe I don't want to stay with the dividend payers and instead go with the cyclical, the companies that are sensitive to the economy. What's your take?
Well, what's interesting was, and this is partly why we're also still very bullish, you know, a lot of people say, well, look how far the market's moved. Before we had the correction, it had run 17%. Well, we found that was too far, too fast, and we got that little pullback. But what's interesting is, during that whole rise, the sectors that drove it were the defensive sectors. You know, people didn't go in saying, hey, the economy's good, earnings are good. They're saying, I want to get in equities, but I'm going to get in the high dividend paying companies, which tend to be the utilities, consumer staple, things like that. So the interesting thing is that a lot of the initial run in the market in the first half of the year was driven by more defensive in nature companies. The other thing that was interesting to me was we have seen very little, some cash has begun to move into equities, Maria, but very little. There's still a ton of cash sitting on people's personal balance sheets. And the other thing people keep waiting for is what they call it the great shift, which is to move all the flows that have gone into the bond mutual funds. So over the last 5 years, $1.1 trillion have flowed into fixed income mutual funds. And at the same time, $500 billion have flowed out of equity mutual funds. That process has not begun at all. In the first quarter, you had positive flows finally in equities, but you had positive flows still in fixed income. So a lot of cash, the process of unwinding fixed income and moving that to equity, not even begun, and the beginning of the rally first half of the year defensive. We think as you go forward, as people do get more confidence in the economy here and globally, and they look at the relative values, people are going to increasingly say we need to have more of a pro-cyclical bent to the portfolio. That's what we've been recommending. So to that point, we do like technology, immense driver of so many things, and you know that's another important thing about the U.S. We're at the forefront of that. So our companies and industries are benefiting from that, often through greater efficiencies, higher productivity, lower costs of doing what they do. We like technology, we like industrials. Again, companies and industries exposed to both accelerating growth here, but very importantly, accelerating growth globally.